Markets are hitting record highs, but next week brings serious event risk. Tariff deadlines, central bank decisions, and heavyweight earnings are all lined up. So, what should traders really be watching out for? I'm Johanna Bota, and joining me today to break down the key themes and top risks to keep on your radar is John Kicklighter, StoneX's global head of content. Welcome back, John. Great to have you with us. So, we are heading into a big week, so let's just kick things off. What kind of market conditions should we be prepared for?
So complacency is still the strongest, I think we would call it virtue at this point because it's consistent with markets, but it is the strongest overall force. There are a lot of fundamental uncertainties. There's a lot of need to question our risk distribution, yet no one wants to take the first step and de-risk and in turn risk losing out on capital gains and yield that would come if the markets just kind of casually march along. So it's that historical lull. We actually just passed the 29th week of the year, which is the lowest of the VIX historically. And we are subsequently moving back into what will be the upswing of the midsummer into the fall market conditions. But we're still very early days, and there's really nothing systemically that would pull markets away from its passive enthusiasm. And we're actually seeing beyond just like the benchmark S&P 500 and other top tier risk measures, popular ones, that there's a little bit more distribution into other risk oriented assets. While we do have concentration like the NASDAQ 100 relative to the Dow, so there's appetite for the high market cap specific shares, or if you're looking at something like the S&P 500 versus the rest of world equities, so an S&P 500 versus a VEU ETF, those are still seeing concentration, but at the same time, there's a broader appetite. There's more risk in carry trade and emerging market assets and high yield fixed income. And I think there was also a report that said that retail trading in single shares is at its highest level in record or in recent records, higher than what we saw in the meme stock craze. So clearly, the markets are very comfortable about that. However, we are going to hit something of a fundamental wall. We have some event risk starting this coming week, and then the week after is going to be even more intense for a number of the top themes. So it's what the markets are willing to tolerate and whether there is more anticipation ahead than there is we need to respond now before that event risk hits.
Let's get to it then. As all the momentum builds, what are the major themes that could shake things up for either the bulls or the bears?
So tariffs is going to continue to be very headline dominant and not necessarily market moving. So we will see and absorb a lot of the threats of new impressive rates. They're not deviating far from what the original reciprocal tariffs were that the U.S. had offered up previously, but they are, I think, more intensive in terms of the threats being made, especially with the likes of Brazil, which was 50% tariff rate threat and conditions that are almost impossible for them to meet to walk back from them. But then major economies like the EU and Japan are facing very intensive tariffs as well. So that that tariff date is expected to be on August 1st, so the Friday after next. But it's going to be very forefront in the mind. We'll see if it actually garners any kind of meaningful traction, or if there's going to be that skepticism, the taco trade, so to speak, and then subsequently just carrying on. I would say also the threats to Fed independence are also really stepping up. We're getting a will they or won't they, or will he or won't he? Donald Trump making all the threats, saying that Fed Chairman Powell is too late. He should already be cutting, and threatening to remove him. Sideline conversations that are supposedly had, and he's walking it back and seeing the market volatility. There's a lot of issues that come with the U.S. President potentially removing the chairman with whatever cause he wants to use, because it will undermine sovereign stability. However, I don't think it necessarily leads to a market crash, and I don't think it leads to big rate hikes or sorry cuts, because it's not just Fed Chairman Powell who is voting to hold rates steady. Most of the board is doing the same. So that's still going to be debated. And obviously, we had this past week. One of those stories have a lot of volatility in particularly the dollar. So that's a theme to watch. And I'd also watch expectations leading into just the Fed rate decision, which is not this Wednesday, but the next Wednesday, because we have a few rate decisions this week that will really tee it up.
So lots of things making waves then. So one more thing before we let you go. Walk me through the one event next week that could really shake things up or shift a focus.
So I'll give you one per day because there is a lot of event risk. I would say on Monday, we have the PBOC or the Chinese Central Bank's rate decision. Now, it's not going to really be a surprise. However, it does get us going in that direction. Tuesday, I would say we have some central bank speak. So you have both Jerome Powell and you have ECB President Lagarde. Both are within the easy reach of their central bank rate decisions, and they're not supposed to be speaking on major topics. However, we will be watching very closely, particularly if Powell is asked anything on the sidelines about the pressure that President Trump is putting on him. Wednesday, I would have to say between South Korea's GDP and Tesla earnings after hours, I would go for Tesla earnings. It is a very large market cap stock. It's one of the Mag 7. It's been a little on the outs with the rest of the Mag 7. So this is probably the one that you want to keep a little bit closer eye on from a global risk perspective. Thursday, I would say the June PMIs are very important. It's a very comprehensive overview of the roundup of the second quarter economic activity of the major developed economies. But that ECB rate decision, even though it's expected to be no change, is going to be very controversial because they'll have to also consider what do the threat of tariffs mean in terms of our inflation forecast as well as our growth forecast. And then on Friday, I would say U.S. durable goods orders because we keep tabs on what the actual tariffs are. We see a lot of fanfare about the taxes being collected from the tariffs. We also want to see what economic impact it has on the US economy.
John, as always, thank you so much. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.